All right. So, how to future-proof your wealth with digital strategies? That's the topic that's being covered on stage today. And talking to us about this is a man who has pledged to nurture an investment culture in Kerala and in our country. Presenting to you Mr. Alex K Babu, founder, chairman, and managing director of the Hedge group of companies. Hearty welcome to the stage, sir. Let's hear it louder as we welcome our keynote speaker on stage. So would you like a cordless mic?
Good afternoon, one and all. Extremely an honor to be part of this stage, Future Summit. Thank you, Jain University, for inviting me to this session. To be very honest, I still don't know how the future holds for the segment what we are talking into, because the financial services segment is the most disruptive segment as we speak. As financial market participants, so we go through these changes in technology and regulatory environment almost on a daily basis. And to be honest, we don't draw the line for more than 5 years. 5 years is the max. So when we talk about the next 25 years, 2050 and all, I don't think there is anyone who can speak about in a very, very honest manner on the financial services. So we are all trying to be in the game, because this is actually like how Simon Sinek says, it is an infinite game. It's not a finite game. So you have to keep playing the game. If you are playing the game well ahead of your time, like it's my 10, 15 years, if you're playing the game for 15, 20 years, I think we might lose out because of the cash burns and the resources burns what we have. Or if you are behind the game, we are already lost, we are already dead. So we try to be in the game for next 3 to 5 years is what we try to do, like all the financial service institutions try to do in that perspective. So we draw the lines in 6 months, 1 year, 3 year, and 5 year. There are only phases like that. So just to give the context on the topic, it's a very, very, very complicated topic. So I spoke to Dr. Anjana, I spoke to a couple of others also, like what exactly is actually you are looking forward from this topic. So everyone is talking about the fintech evolution and the digital strategies for the new world of investments and wealth management in that perspective. So to have a context on the same, I think we should go back in time, or not go back in time. We should draw some parallels on how we have evolved over the years. And I'm not talking about over the years of last 100 years or 20 years. So normally what I have gained my knowledge is through experiences. So on the experiences, I'll say how my dad, myself, and my son is actually using technology to do money transactions. So my dad obviously is a baby boomer time, so 1950s to 1970s, we can call it as baby boomers. So I am born in as a millennial, so 1980s to maybe 95, 2000. And my children are in the Gen Z, and the new word is called Gen Alpha. Gen Z and Gen Alpha, I have 3 children, 3 kids. The 2 are in Gen Z, and the third one is too small. He's Gen Alpha. So how we are transacting today is the first context I would like to place for the program. Let's put in the case of like how we used to transact money. My dad and all, the baby boomers, I think some of you sitting here will still be comfortable in transaction through checks, checkbooks. So that is how we used to transact between two people or two institutions for that matter. When it comes to my age, we used to do through web transfer, like internet, uh, like not UPI, the other bank transfers and all what we used to do. And the third generation, which is the Gen Z, is all about UPI. So I just give an example on how my son, when he turned 18, so when I opened a bank account for him, so he received a checkbook. So he never seen a checkbook. So he was asking, why, what is this for? I said, this is how you transacted earlier. This is how you can transact even today. So he has never seen a checkbook. Second thing, when he joined, so he went to college in Xavier's College to study economics in Bombay. So when he joined, he took up an apartment with his friends and all. So to transfer the rent and all, he asked to transfer the rent to me, and I said, give me the bank account details. He said, why, Appa? Why you are asking for a bank account details? You just, you have his number, you just transfer through the UPI. So I said, no, I think there should be a bank account details. So then it can go on a monthly basis. I don't have to interfere. I will set up a natch for that and kind of thing. So he didn't understand. So the new world was completely on UPI and all. So this is how we are transacting today on a day-to-day basis. When it comes to shopping, let's how you consume. My dad or my parents or the baby boomers would like to consume or used to consume, or even today, I think they are consume in the sense that it's more about the accessibility and the people who know around them. So the accessibility. So if my dad is living in Calicut, so he will be comfortable to deal with a shopkeeper who is around him, close by. Basically, if something is broken down or something is there, I can go there and reach him and tell him that, okay, this is what it is. I need to change it or whatever it is for the services or the product quality, that kind of service. But when it comes to the millennials, it's not about accessibility, it's all about offers. We look at offers. We always look at offers like, where do you get the best offer from? Which supermarket give you the best offer? So we went around looking for offers. It's not about on the accessibility area, but mostly on offers. So when you connect with the Gen Z, again it is offers, but we call it as future benefits. They are looking at future benefits. So Gen Z, how they consume today, obviously they are also looking at offers through the e-commerce and m-commerce platforms and all. But having said that, they like to transact through the credit cards or the debit cards which give you points, and which these points can be redeemed in future for their experiences. For example, like I'm using an HDFC Infinia card, so my kids make sure that I spend in that card, so that means I get points, and these points can be redeemed for their travel and hotels or whatever it is in the future. So they are thinking about the future. So these are the three ways how we are consuming today. I don't know how Gen Alpha is going to consume. I don't know how Gen Alpha is going to transact. Maybe we are talking about a technology where there will be a chip inside our arm or palm or in a forehead or something where we just have to walk through, the transaction is already done. Or maybe in a shopping experiences also, there are crazy ideas which is coming in. So I can't say on that because there are numerous ideas on how it is shaping up, how the future is shaping up. Having said that, let's come to the topic which is called the investments area. So investments, how the baby boomer market, how the millennial market, and how the Gen Z is investing. So that is the whole topic which I would like to focus on. The baby boomers, as we all know, they invest only in real estate, gold, and bank deposits. Real estate, gold, and bank deposits. And the bank deposits also, it is made sure that, okay, they will put in the bank deposits, which is the banks which are closer to them, accessible to, they know them. In Kerala market, you can say that, okay, all the HDFCs and ICICs of the world, the biggest bank is still Federal Bank, uh, South Indian Bank, Catholic Syrian Bank, all the banks which you are saying. Even though ICICI of HDFC of the world are the largest banks in the country. So that is how the baby boomers invest. Real estate and gold, you all know that. So millennials are a little bit more opened up in the sense, so now we are investing in stocks, mutual funds, obviously gold through, the direct gold is there, but the sovereign gold bonds and other ETF options are also there. And in real estates, rather than buying plain lands, we invest in apartments or in commercial spaces. Those kind of things are there in the millennial space. Whereas Gen Z is completely different. Gen Z is completely different. Gen Z is not talking about real estate investments at all. Maybe, I don't know, maybe the fractional real estate portfolio or something, when it comes, they might come in. But today they are talking about only blockchain, all cryptocurrency, NFTs, non-fungible tokens, even in stocks also, like it is not stocks. Today you know that the Indian market is also exploded big time with the equity derivative markets, which is the futures and options market in capital market segment. I think we are the largest in the world today in the turnover basis on a futures and options market. It's a $400 trillion rupee market on a daily turnover basis, which is by far the largest in the world. Why? Who is consuming that? It's all the Gen Z who is consuming that. And this phenomena has exploded after the COVID scenario. So where the new apps, the fintech apps, the accessibility, the user interface improved like crazy. And then automatically what happens is people started using these platforms as a gaming platform. Mostly these people are, mostly the Gen Z are using these platforms as gaming. I think say that they are making money, they are losing money, but the study says that 91% of the people are losing money. It's a SEBI report saying that last year alone, 23-24, we lost 57,000 crore of retail money. Around 91% people are in losses. And in 3 years, last 3 years put together, it was around 1.5 lakh crore. So who is actually making money? That's a different question altogether. That's a different topic altogether. But how they are consuming today, it is purely based on speculative interest. Because they want the quick actions, like Francis was saying that, so the attention span is also very limited for Gen Z and Gen Alpha. So attention span is limited. So they want the quick money. So that is why the speculative market is going up like crazy. So equity derivative market, cryptocurrencies, NFTs, these are the topics of discussion for Gen Z. Is it right? 100% we have to move into that new segment. But what are we missing? Are we missing something? Is the question what everyone should ask. The missing point is very simple. So the risk of not knowing or the risk of half-baked knowledge is the most important risk what we are talking about. When you get into new areas, the risk of half-baked knowledge is huge. So let's take trading for that matter. So everyone says that today there are a lot of influencers, financial influencers in YouTube. There are many strategies which has been talked about. If you do like this, if you look at this indicator, if you do look at this technical charts, if you look at this fundamental parameters, you can trade and you can make money in just like that. So, but having said that, have you ever thought about the process where there are machines which is being traded, there are algorithms which have been traded, and those people are, or those machines are, those systems are much faster than you. Even before you know that the trade is happening. This I will give you an example with what I have learned from my early days in financial markets when I was studying the US markets. So Goldman Sachs used to control 10% or 15% of the total aluminum market in the world. I'm talking about 2005. So how did they used to do that? because they run huge machine learning process at that point of time. I'm talking about 20 years before. Machine learning and algorithm process, because they were actually doing short-term trading. Short-term trading, and they had the parameters set. It's not like artificial intelligence what we are talking today. It is not generative AI what we are talking about. It's about set algorithms which they have derived from the historical patterns and put that into the computers, into the supercomputers, and executed trades accordingly. So it is, I'm just giving a parallel example on how things have been there in the past, and also how the things are going to be in the future. So the machines will definitely take over. The speculative trades, what you are thinking about, how you can make money from a small intraday or a intra-positional market, is absolutely not right. So the machines will have to take over that, will take over that. But what is your role? Your role is definitely there. The humans have to input that. Even today, we are talking about generative AI, not regenerative AI. So generative AI also, you have to do the fine tuning. So when you use the ChatGPT also, it is based on your questions, how the answers comes in. So similarly, the input you have to give it. In the current world, you have to put the input, but maybe in future, the regenerative AI we are talking about, that itself will learn. But as of now, as it stands, the generative AI is there, where you should be tagged into a product where there is an algo product which is there, whereas you can fine-tune the algo if you have the right knowledge on what you are talking about. It's a very complicated thing. I don't want to dwell deep into it, but to put it very simple, if you know certain parameters are, this is how I want to do the trade, that parameter, the execution of the trade has to happen through a machine, whereas the fine-tuning of the parameters you have to control. That is as simple as that. When you get into speculative trading, when you use futures and options for that matter. And coming to stocks directly, people are investing in stocks. So everyone is fond of Zomato, Swiggy today. Today, everyone is fond of the new gen technologies. Everyone is fond of the startup world. Everyone is fond of how do you, they want to invest in that companies. But my question is, how do you evaluate these companies? Because being a millennial, our evaluation method is completely different. And whereas we are also learning the new method, which is called. So earlier, our method of valuation was, I think even today, the universities are all using that old method called the capital asset pricing module, the price to earnings model and all. These all things are all gone in the new world. It will not work. The price to earnings model will not work, because when you see Zomato, Swiggy, how do you value? Because it's a cash burn company. How do you manage? So the new terminologies are contribution margin, take margin, CLV, customer lifetime value, the customer acquisition cost, CAC. These are the new terminologies in the market today. So if you don't know that terminology and just going by the herd mentality, I don't think you are actually serving justice to what you are trying to decode. So if you want to get into this investing world, you need to dwell deeper into the new method of valuation methods. How do you analyze a company and all? So as I speak, I'm also learning these new things, because we are all old generation, the millennial generation. We come from the Warren Buffett world, valuing the company with the discounted cash flow method. But here we are talking about something new. And we are also learning. We are also building positions on the new age technologies and all. The third thing is crypto. Everyone wants to invest in crypto. So what is a crypto? How the currencies are evolving. They're just seeing the prices going, the Bitcoin going up to $1 lakh. It was at whatever, $5,000 5 years back. Now it's at $1 lakh. They're just looking at the price. What is the background? How the system is shaping up? How many cryptocurrencies are there? What is the background of a cryptocurrency? To be honest, I'm not the person to talk about cryptocurrency, but the little knowledge I know, I am an investor in Bitcoin, and not through Bitcoin directly through the wallets and all, But the technology as such, the blockchain technology asset, and the concept behind Bitcoin is because it has only 21 million coins. There is a supply-demand mismatch is also there. So the software is created, the technology or the currency is created in such a manner, there is a supply-demand mismatch always there. And also, there are many coins which are missing because of the password lost. People are losing that. There is a vault system, and the vault system is extremely secured. You cannot do anything if your password is lost. So there are many coins which has been lost. So the Bitcoin is the only currency, only cryptocurrency which we can say that there is some acceptability in the market, especially after US have opened up, and there is a Bitcoin ETF which is listed in Nasdaq. So cryptocurrency is again evolving. So when you talk about cryptocurrency, I think today Gen Z, everyone is investing in hundreds of cryptocurrency, just seeing the price movements. Rather than looking at the price movements, I request everyone who is into cryptocurrency to do the background check on what it is made of, and what is the current regulations which is coming in, and how safe your investments are. And based on that, you put your money into it. You put your efforts into it. So that is the background of the Gen Z, how they are evolving in the investment space. When we talk about all this investment space also, let's be very clear about the most important risk, which is the cybersecurity risk. Today we are completely living in a digital world. The financial parameters, the financial models, everything are completely in paper today. And tomorrow, I think the currency also will be invalid, will not be there. Even today, when you travel to, say last month I was in China. So China, in the Chinese financial system, we cannot use our Google Pay, or even you cannot integrate with their system. So automatically, as tourists, we have to use their currency. But in China, no one has any currency with them. It's completely on technology, like how we are using UPI today. Similarly, that no one has anything. It's all cards or the phones what they transact. Only the tourists are actually carrying the currency. Similar, I think the India is also not far behind. We are also using the same today. No one is, most of the participants are not carrying currencies today. So we are also relying on the cards and the UPI to do our transactions. So, but having said that, the cyber security is very important. You are just seeing numbers. So if you don't have the right checks and balances in place, the systems what you use, your internal security controls what you're going to do, you cannot blame the system. You cannot ask people to say that, okay, just because of putting your money in your bank account, only I lost it. No, it's mostly the issue is from personnel. Most of the cyber frauds which is happening, 99% of them are from the personal faults. So that we have to be absolutely wary about and clear about when you enter into this digital world of investments or transactions for that matter. So I think I'm running short of time. I think I'll close this the introductory note on this topic, because it's very, very, very vast topic. I don't want to get into detail, because to be honest, I don't know how it is going to evolve in next 10 years. I can only talk about the current things what we are dealing with today, and it is valid for the next 3 to 5 years maximum. In 3 to 5 years, the new processes will evolve, new systems will come in, new products will come in. I think these sessions, whenever, like if the Future Summit is planned to do every year, I think every year you will have new topics on this segment. Thank you so much. And if you have any questions, I can take some questions for that matter. So they are still studying it. First of all, they want to, every other country, not only RBI, every other country accept technology, blockchain as a technology, because that is more efficient. That's efficiency like crazy. So you can remove the intermediaries. Like today, the intermediaries are the banks and financial institutions. Once the blockchain is there, you can remove the intermediaries and you can directly transact. So 100% they are happy to do the blockchain technology, but they don't want to lose the control of the currency. The blockchain technology is evolved in such a manner it cannot be controlled by someone. So they are trying to come up with a digital rupee. Even US is trying to come up with the digital dollar. Those kind of things are there. They don't want to lose control of their currency. So they will try to use technology, but they will not accept the cryptocurrency for that matter. So this is where they are stuck at. Every other government, every other country is stuck at in that process. Any questions? I know it's a very hard topic. It's not an interesting topic to have at 3 o'clock in the afternoon, especially after a good session of Ikigai. This is very difficult to digest. Yeah, I think, fine. Sorry? Yeah, thanks.
It may be a difficult topic, but then I have to say you did a beautiful storytelling, through those 3 generations and how consumption investment is done by 3 generations. I think you elucidated the point beautifully, how transformation has happened over the years. And thank you for that. Thank you for that clarity that you brought in. Loud round of applause for Alex K Babu. And we'd like to invite on stage Professor J. Lata, our Pro Vice Chancellor, to present a token of our appreciation and gratitude to Mr. Alex K Babu. Kudos to that as well, and for being a spokesperson for the kind of financial literacy that we need in this era. Thank you. Thank you so much once again.